Hello and a warm welcome to another episode of South Central with me, Jude Sanith. The show you're watching is India's first and only business news bulletin that focuses entirely on South India and how. Over the last few months, we at South Central have brought you the voices that matter and everyday news that impacts markets and the economy from the 5 southern states. On that note, let's take a look at everything making headlines at this hour. Cholamandalam Investment and Finance issues clarification after Cobra Post's investigative report. The company says allegations of financial mismanagement leveled against it are malicious and baseless. It adds that the report itself has ulterior motives. Purvankara acquires a 53.5-acre land parcel in Anekal near Bengaluru. The company says the land bank in question has a saleable area of 6.4 million square feet with a GDV of 4,800 crore rupees. A report by talent service provider CareerNet says Chennai and Bengaluru continue to be major SaaS talent hubs. The report adds that while mid-sized SaaS firms continue to hire, smaller companies have clamped down on headcount. Andhra Pradesh and Telangana will cough out more funds under the VBG Ramji bill. The Manrega replacement legislation will see both states under financial pressure as their contributions rise fourfold. And the Bengaluru Metro will get 41 kilometers longer in 2026, says Karnataka Deputy Chief Minister D.K. Shivkumar, adding that tenders for Phase 3 of the urban transit project would also be floated in a month's time. Right, first up on the bulletin today, the Murugappa Group-owned Cholamandalam Investment and Finance Company has issued a statement in the light of serious allegations leveled against the company in a report by investigative news portal Cobra Post. The company has denied all allegations made in the report, calling them malicious and baseless. Chola Finance has also said that the report in question has ulterior motives. The company maintains that its guidance remains intact with no changes to robust asset quality and liquidity. For context, Cobra Post's investigative report published on its website claimed that the promoters of the Murugappa Group engaged in financial mismanagement and made cash deposits that hinted at asset quality risks. My colleague Mitali sent us this report.
Right, the stocks of Cholamandalam Investment and Finance remain in focus today after the management has denied all the allegations put by Cobra Post digital portal, and they have said that all the allegations were malicious and baseless and say that there is no change in the business guidance whatsoever. Also, the company maintains the asset quality, liquidity and operations remain robust with 14,900 of cash reported as of November 30, 2025 by the management. Also, they spoke about the credit ratings and they remain at AA+ as of now. The stock has outperformed year to date by 42%, outperforming both the indexes Nifty as well as Nifty financials. Now, if you see the growth and business mix of the company, growth continues to be driven by the non-vehicle finance segments. Also, if you see the loan against property, there the AUM grew around 33% year-on-year basis, while their SME AUM, it grew about 28% on a yearly basis, offset by the muted vehicle segment and also the home loan disbursement, which did not see much growth for this quarter. For the guidance and performance, FY26, the management has reiterated their AUM growth guidance through 20%, where in Q2 we saw that the AUM rose around 17% year-on-year, while the disbursement, they remain largely flat. So guidance on disbursement have been softened due to high single-digit to 10% growth. The net interest margin improved to 7.9% from 7.5%, where the management has guided that there might be an improvement from around 10 to 15 basis points in the second half of financial year 26. The range of the return on assets, they actually remained range bound around 3 to 3.1% and will continue the same for the FY26 also. So what investors will be watching for the next second half is key triggers uh, including a pickup in the quarter 3 and quarter 4 disbursements. Also, the growth in the non-vehicle finance segments like LAP and SME, running at nearly 30% growth as of now, remains central to the story as Chola shifts their focus from purely vehicle finance to now the non-vehicle segment. On valuation wise, if you see, the stock currently trades at 5.5 times the book value and with a 1-year forward PE of around 4.23 times, while if you see their 5 years average, the stock was valuing at around 5.3 times. So overall, the growth stories for Cholamandalam remain stagnant even after the allegations that were put up by this Cobra post, and also 42%, that's huge year-to-date performance by the stock.
Moving on now, Bengaluru headquartered real estate major Purvankara Group has completed the acquisition of a 53.5-acre land parcel in the Anikal Taluk near Bengaluru. The purchase comes with a saleable area of 6.4 million square feet and a gross development value of potentially 4,800 crore rupees. What the acquisition also does is position Purvankara as a strong player in emerging residential growth corridors of Bengaluru, even as it aligns with the company's game plan to expand across key micro markets within the larger Bengaluru region. My colleague Rabinder is here with an update.
Well, as Purvankara Limited is in focus, the company has acquired a 53.5-acre land parcel in Bengaluru with a saleable area of approximately 6.4 million square feet and a potential GDV of rupees more than 4,800 crore. And the acquisition strengthens the company's presence in emerging residential growth corridors of Bengaluru and is aligned with its company's strategy to expand across key micro market, which is supported by infrastructure upgrades, improved connectivity, and a sustained end user demand. And during the FY26 year to till date, the company has already added a project with an estimated gross development value of approximately 9,100 crore with this latest acquisition, and the development area rises to 12.76 million square feet, while potential GDV increases to approximately 13,900 crore. And overall, the transaction meaningfully enhanced Purvankara's launch pipelines and GDV visibility, reinforcing its growth strategy in high demand Bengaluru micro market. And commenting on this, management said that it is disciplined, reiterated that disciplined long term growth approach which is focused on consistently adding quality development land across strategic micro market. So back of this, Purvankara Limited is in focus.
Right, moving on then. If there's one industry that has seen a great deal of churn in the post-AI boom that has besieged Indian tech, it's the SaaS ecosystem. The software as a services industry has had to reimagine the work that it does on multiple fronts. After all, AI is now poised to take over customer relationship management and change the way SaaS tools are built. So it isn't too surprising that pricing models have seen some change too. Recently on the show, Freshworks CEO Dennis Woodside had said that the SaaS major had begun charging its customers per AI session, with 7,000 out of Freshworks' 65,000 customers now paying for AI services. Now, a recent report on the SaaS talent ecosystem by CareerNet, capturing key trends from the first half of FY26, has revealed that the churn notwithstanding, Chennai and Bengaluru continue to remain the largest reservoirs of SaaS talent. And while overall SaaS hiring eased out in Q2 of FY26, the demand for key roles within SaaS continues to be steady. Which roles are these? Well, CareerNet's report points to software engineering roles as continuing to account for 38% of hiring across the ecosystem itself, followed by sales and business development. To break down some of these insights, I'm now joined by Anshuman Das, co-founder and CEO at CareerNet. Anshuman, firstly, thanks so much for joining us on the Bulletin. My first question to you. It does seem like a foregone conclusion that SaaS will always remain a stronghold, talent availability-wise, of Chennai and Bengaluru. In fact, Chennai alone accounts for 34% of India's SaaS talent, according to your report. Bengaluru, on its part, accounts for 21%. What's got both these cities leading the rest when it comes to SaaS talent itself?
Thank you, Jude. Thank you for having me on the show. So, Chennai, obviously, because of the fact that the two most early companies in India, Zoho and Freshworks, were the first two really the true SaaS companies which fostered a very strong product culture in that. And I think they developed a very strong base of product managers, engineers, and go-to-market professionals. And over a period of time, if you notice, this whole network in Chennai has evolved on to spawn out many more other companies. And that's how the base bed in Chennai got built. And it is not a surprise that 34% of India's SaaS talent comes from Chennai. Bangalore obviously is a very major tech hub to that degree. And given the fact that there had been so many other startups and GCCs and global companies which were there, so Bangalore was a very natural choice for very high-end talent or for great tech talent in the SaaS ecosystem. And that's why you see a reasonably high degree of propensity for companies to either start in Chennai or to expand in Bangalore. And that's why 55% of our SaaS talent ecosystem resides in Chennai and Bangalore.
Right, and speaking of talent itself, let's talk about that big finding from your report for H1 of FY26. Sure, hiring might have eased off thanks to smaller SaaS firms cutting down, but the mid-sized SaaS segment is still hiring, even if marginally so. How significant is this finding really?
Well, this is quite a significant finding to that degree. And the mid-sized firms, so if you actually see our overall report, you will see that there are 25,000 SaaS firms in India and only 1,000 of them are funded. And what we have studied is the 100 companies. And typically, if you take these 100 companies, they are the ones which are essentially building on to the most of the SaaS ecosystem. And when you look at this 100 companies, this whole mid bulge bracket, which is mostly around the 500 to 1,000 employees bulge bracket, is the one where we have seen growth. It clearly points out to the fact that we will very soon see many more larger SaaS companies coming out of India. So while the smaller ones may have slowed down, but the mid-sized ones are essentially finding a lot of growth, and they are essentially expanding on go-to-market and engineering and adopting AI, and which essentially points out to the fact that there will be at least good number of unicorns and good number of large SaaS companies coming out in FY27-28 very soon.
Anshuman, I want to talk to you a little bit about the kind of roles that are being hired for. It seems like software engineering and development continues to remain a HR favorite. Explain this to us for a bit. The discourse that has been doing the rounds is that AI would reduce the need for base-level developers since AI agents have already begun writing boilerplate code. And yet your findings say SaaS firms continue to hire in engineering and development. What's that all about?
See, SaaS has never been a very big, I would say, volume-wise employment generator. It has been a very value-wise and a very high-end job generator to that degree. So SaaS as a overall, if you see these 100 top companies roughly have roughly about 75,000 folks, which is probably even what 1/5 or 1/6 of what a Infosys or Wipro TCS will have. So, but from a revenue point of view, their contribution is almost like about $15 billion plus kind of a thing. So SaaS will continue to remain a niche and will continue to remain an area which will generate a lot of top dollars, will generate a lot of market value, will attract a lot of funding. But it is not an area which is a volume game. It is a very value game, and you will find far more deeper AI capabilities which will get built. So the SaaS per se will attract a lot of top tier talent to that degree. And it will have a lot of downstream effect of a lot of services getting built over a period of time, which will be more per se, more volume driven jobs to that degree. But SaaS per se will be very value driven to that larger degree.
Right, and speaking of talent itself, let's talk about that big finding from your report for H1 of FY26. Sure, hiring might have eased off thanks to smaller SaaS firms cutting down, but the mid-sized SaaS segment is still hiring, even if marginally so. How significant is this finding really?
So, AI is definitely somewhere helping to improve a lot of productivity, helping to write code. But I think there is a lot more which now, because of AI, a SaaS company can expand horizontally, as in sideways, as well as vertically and downwards both ways. So the overall need for first these SaaS companies to do much more is increasing. The second, I think the speed at which they can go and acquire many more markets and more customers is very high. So AI to a larger degree is a big tool for them to do more with same. And that's where you see that the overall hiring headcount is not changing big, but there is a whole up leveling which is happening. So which means that there is a lot of more engineering product and more AI native talent which is getting hired. So per se the headcount may not increase, but you may see some of these companies actually doing far more than what they were doing earlier because of AI capability getting inbuilt.
Anshuman, what's your outlook on funding in the SaaS ecosystem? Your report points to the fact that a vast majority of the SaaS ecosystem, that's 86%, remains unfunded. How is this likely to change in the medium term?
So two, three things it highlights. One is obviously a very large chunk of SaaS companies in India still do not have a very global outlook. So this is essentially still there is a lot of story which is getting inbuilt. It is still in a very early stage. And basically it means that the fact that a lot of these companies are very bootstrapped at the right point in time when the revenue and the economics becomes bigger and they have more global visibility, you will see funding happening. And that means that the future scope for a lot of these companies getting funded will remain there. Second, I think SaaS by model by itself doesn't really consume great amount of capital to larger degree till the time you do not have a very strong go-to market to that degree. So the 14% company which got funded, and even in that, if you see, it's only 25% company which have attracted the most of the capital. So I would say SaaS is still in its early stage to that degree, and it will essentially go a lot more higher on its capability by AI coming in. And that's the time you will see that a funding outlook in this sector will also increase over a period of time. Obviously, the funding outlook in 2021-22 was very high. It has been not that high in 24-25 like any other sectors. But I would say there is a good supply of companies which will essentially be ready, which will be actually consuming good amount of funding in 26-27 as we move forward.
Chennai, accounting for over a third of India's SaaS talent, only has about 11% of India's SaaS offices. So how is this share of real estate investments likely to change going forward?
So 34%, 11% of SaaS offices doesn't mean 11% of the real estate by square feet. It is essentially means if you see our report, we have mapped 100 companies of which typically have got 200 offices in India between these 200 engineering and centers in India, and of which 11% are in Chennai, which means that 22 offices are there in Chennai. And whereas when you look at Bangalore, it has got 27%, which means that 54% is there, as in 54 offices are there in Bangalore. So while Bangalore will have a lower number of SaaS talent and Chennai will have a higher number of SaaS talent, but the number of companies which will have larger centers is Chennai is going to be far more higher. And you will see a integration happening where companies may not have 7, 8 offices, may have maybe 1 or 2 offices where they may say, okay, I pick one center like a Hyderabad or a Chennai, which is my volume center, and my high-end AI and very deep native tech talent, I will likely go and build in Bangalore. So that is how I see the new ecosystem evolving between Hyderabad, Chennai, Bangalore. That is how I see the most 3 prominent centers are going to come out. And obviously, up north, Delhi will definitely attract a good volume. So that is where I see the 4 places where you will see a lot of SaaS talent happening. And Pune will probably be mostly the 5th one to that degree.
Well, on that note, great speaking to you, Anshuman. Thanks so much for joining us and breaking down those insights. Staying with human resources, the newly tabled VBG Ramji bill, known in some quarters as the Manrega replacement legislation, is all set to make a significant dent in the finances of both Andhra Pradesh and Telangana. As per provisions of the legislation, states will have to bear 40% of the program's expenditure. As a result, Andhra Pradesh, which saw expenditures of 7,800 crore rupees in FY25 under Manrega, only coughed out about 780 crore rupees. That sum is all set to jump fourfold to 3,120 crore rupees. Similarly, Telangana, with an overall Manrega expenditure of 4,340 crore rupees, currently contributes only about 434 crore rupees. Under the new funding formula, this sum is projected to rise to approximately 1,736 crore rupees. Well, shifting focus to Bengaluru now, the city's Namma Metro is all set to get 41 kilometers longer in 2026. That's the word coming in from Deputy Chief Minister D.K. Shivkumar, who said that the city will see the extra link added to its metro network between May and December next year. Shivkumar said that the Kalena Agrahara Tavarakere elevated section of the Pink Line with 6 stations will open in May, while the 13.8-kilometer Dairy Circle Nagawara underground line with 12 stations and the 19.6 3.75 kilometer long Silkboard Junction Kiarpura line with 13 stations will be commissioned by December. That also means that come 2026, the total operational length of the Bengaluru Metro will increase from 96.1 kilometers today to just over 137 kilometers. The Deputy CM also said tenders for Phase 3 of the Metro line will be floated in a month's time. Moving on to news from the healthcare space now, Chennai's Kaveri Hospital has launched a new 5G tech-enabled SOS button for its ambulance services. Under the newly launched piece of tech, the hospital's network of 200 ambulances will be connected to a GPS network mapped to its homegrown app. In a possible healthcare emergency, a tap of an SOS button on the app alerts for an ambulance to be deployed to the scene of the emergency itself with an instant teleconsultation from one of the hospital's doctors. In a chat with South Central, the hospital's co-founder Aravindan Selvaraj told me that the service will be rolled out to the hospital's entire network of ambulances across Tamil Nadu and Karnataka, which it hopes to expand to 1,000. Here's a slice of that conversation.
We have all these quick commerce companies, if you have seen, they are coming out with ambulance at a doorstep within 10 to 15 minutes. Actually, a traditional healthcare provider should have done it a very long time back. Kaveri, with all this infrastructure and more than 200 ambulances in Tamil Nadu alone, we thought we should do it because it is backed by the solid medical doctors also.
If the 200 ambulances in your network were to be available on apps like this, or the app that's being rolled out, will all of this have doctors also available for their emergency situation teleconsultation as the emergency situation pans out? Is that necessarily going to be the case?
Yes, it will be. It will be because we are running all our hospitals, the 12 hospitals that we have, we are running 24/7, the emergency services across all the specialties. So they are available. They are available already. They are in the hospital and they will offer this emergency consultation through this app.
Right. And last question before I let you go. How game-changing is it simply in terms of an emergency healthcare perspective? I would assume that a lot of time is lost by the time an ambulance typically and traditionally attends to an emergency and the patient is then taken to the hospital for, let's say, emergency procedures. But this intervention now in terms of getting an ambulance to a location much quicker and a doctor being available on call instantly, if you could help me understand how it will prevent, let's say, a fatality or, let's say, an injury from getting worse, what is that metric like?
So it will be a game changer. The reason being, many times when the patients they have an emergency, they don't know how to reach out to which doctor, which hospital. And sometimes the people with acute heart attack or acute stroke, they end up in going to a facility where the facilities to treat these kind of acute medical emergencies is not available. But through this app and through this SOS feature, when they press it, our doctors, emergency specialists who are specialists in cardiac, neuro and ortho care, the emergency care, they'll be able to tell, no, this is the one which I need to bring and get into the ambulance quickly and come to the tertiary care hospital. No, if something is very simple, for example, some fever, dehydration, which can be managed locally as well. And by the time the consultation is going on, the emergency ambulance also will be there at the doorstep. So it is going to be a game changer. As I told, there is a lot of things that we have to work with the government and other organizations to get this infrastructure right. So,
well, on that note, that's about all the time we have on today's episode of South Central. Thanks so much for watching. We'll see you same time, same place tomorrow for more news and updates from the South. For the moment, it's goodbye from us.